And welcome to the session in which we discuss asset turnover. So basically, asset turnover is part of long-term planned asset, and how do we analyze, how do we use this information to make a decision about the company, or to evaluate, for that matter, to evaluate the company's performance. So let's first look at how we compute this ratio, asset turnover. We'll take net sales divided by average total asset. Every time you hear the word average, it means you are taking two numbers and dividing them by 2. And those two numbers are beginning this year asset and last year asset, or beginning and ending asset, which is this year and last year. Let's take a look for P&G net sales for 2015 were 76.2 million, and its total ending assets was 129, and the beginning asset was 144. Therefore, first we compute the average, and we'll take net sales divided by the average, and we'll get to 50.56 times. What does that mean? The first thing, if you want to understand, is what does the asset turnover means? Well, let's use some simple figures. Let's assume you had $100 of sales and $200 of assets, average assets. 100 divided by 50, it gives you 50.5 times. The ratio is 0.5. What does that mean? It means you have $200 in assets and you have $100 in sales. It means for every dollar in asset, you are generating 50 pennies in sale. So for every dollar in asset, you are generating 50 pennies in sale. This company, P&G, is generating 56 pennies per sale. So P&G is more efficient. Why? Because they are generating more sales per asset. More sales per asset, yes. So each dollar invested in an asset that produced 56 cents in sales. If a company is using its asset efficiently, each dollar of asset will create a high amount of sales. Now, obviously, if a company is making 0.6, then it's more efficient than both of them. So the higher this number, the better off you are, the higher this number. Again, when we compare ratios, when we judge ratios, we always put them into perspective. We compare them to a prior period, to a prior time frame, similar to the time frame that we are discussing. For example, this year versus last year, this quarter this year versus this quarter last year. Or we can compare them to a competitor. What's the average for the competitors? Or we can compare them to the industry in general in which we are operating. Okay, but this is how we use those. Now, the asset turnover, it can be broken down further, but it's beyond the scope of this discussion. I just want to let you know, if you want any further discussion, go to my intermediate accounting channel on Farhat Lectures, and you will have a more in-detail discussion. Let's take a look at this example. P company reported net income of 180,000, net sales of 420, and total asset January 1st 460, and total asset December 31st 540 million. Compute the asset turnover. Well, guess what? They're trying to confuse you with net income. We don't use net income. We use net sales. So it's net sales. So basically net income is for confusion. 420 divided by 460 plus 540 divided by 2, the average. That is going to give us an asset turnover of 0.84, which is very high. Now, let me tell you something. Certain companies, they might have a high asset turnover. Why? Because the nature of their business, they sell a lot. For example, if we look at a company like Walmart will have a high asset turnover. Why? Because they sell a lot. It's part of their business. If we look at a jewelry store, a place that sells jewelry, they don't sell a lot. Why? Because everything that they sell is very expensive. So they don't sell a lot, but when they sell, they make a lot of profit. Okay? So just want to make sure you understand, you cannot compare the asset turnover between companies if they're not in the same industry. Okay? So you cannot compare Walmart to a company that sells jewelry. Two different type of companies. Okay? The jewelry store, they don't sell as much as Walmart, but they make more profit per sale. Walmart make less profit per sale, but the amount of the sale that they make will make up for it. Okay, so this is all what I'm going to say about asset turnover. Again, if you need any further discussion beyond the scope of this, you can go to my website. If you're studying for your CPA or if you're studying for your CMA, by all means, study hard. It's worth it.